Welcome to Barchart's series of educational webinars designed to enlighten you on a variety of trade ideas and concepts, inform you of the pages and tools Barchart provides related to these concepts, as well as offer some trader's insight to help you make a more informed investment decision. Today's session, uncover profitable stocks with Barchart's exclusive screeners. Now, although any stock can become profitable given enough time and unlimited risk, Barchart screeners try to optimize timing based on a very specific set of parameters in order to identify a unique group of candidates from the vast number of stocks whose price characteristics or fundamentals meet the screener's conditions. From there, traders or investors alike can select from those candidates who meet their individual strategies, risk profile, and price objectives. Hello, everyone. My name is John Rowland, Barchart's head of trading education, and today I'm excited to present two new additions to Barchart's stock screener library. Now, I believe these new additions are uniquely different in their filtering process and will offer or identify outstanding choices for potential price movement. Now, my task today is to help you weed out the outliers, focus on the right sequence of price movement, and analyze risk and rewards. I'll offer some trading strategies that I believe will complement the likely price movements. Now, before we get to that, please welcome our moderator for today and Barchart's project director, Jean Baker. Hello, Jean.
Hi there, John. How are you?
I am doing great. And yourself?
I'm good. I'm really looking forward to this session. I think these two new screeners that you're going to cover are going to give everybody a really great end of year little pick-me-up, things to put on their radar and things to maybe look at every single day and try out. So yeah, I'm excited. Close out the year on a good note.
On a high note, right?
That's right.
Okay, so we ready to get started, Jean? It's hard to believe it is the end of the year, though, right?
I know. 2023 just flew by, but
it definitely blew by. All right,
yeah.
Let's get started, Jean, because I do have a lot I want to get to today.
Okay, let's go.
Okay. Let's remind everybody that today's session is for educational purposes only, and decisions to buy, sell, or hold or trade securities, commodities, or any other investment is best made on the advice of a qualified financial professional, and under no circumstances shall we be liable for any loss or damages you or anyone incurs as a result of any trading activity you or anyone else engages in based on the information or material you received through barchart.com and or our services. Okay. So let's see where we're at. So you might not be familiar with Barchart screeners or stock screener page. And what's nice about this is it offers you over 150 different possible data points to choose from. And that would, put into the potential of thousands of potential combinations. But, yet some folks might lack the skills to determine the right combination filters for a thorough search, or just want the convenience of a pre-selected search that will provide them the candidates on a popular market investment concept. And so if we go to our investing page, we have Barchart screeners. And these preset screeners filter candidates based on a prescribed assortment of parameters, and the result is a collection of stocks that meet these specific inputs. Now, the two new additions to our screener library are the upward base consolidation and the lateral price range. Now, they're unique in their own ways. The upward base consolidation sorts for stocks that have been exhibiting strong upward trends, but have paused or have drawn back. Now, this typically is at a level of resistance, and in typical uptrending characteristics are gathering energy before impulsing their way to higher highs. The lateral price range is a collection of stocks that have been in a long-term consolidation pattern. And typically, you'll find these candidates are at the bottom of a completed downtrend. Now, I like to call this screener my Phoenix screener because many of these once forgotten stocks are poised to start a new uptrend. Now, be it trend following characteristics of the uses of the UBC, upward base consolidation, or the resurrection of a new trend with the LPR, investors and traders still need to do their homework in their choice of strategies, risk management, and price objectives. So let's start with the lateral price range. And if I just click on that, notice how it jumps from that page to our stocks screener page. And if I click on the set filters, this will be the parameters that will be found inside of this screener. And I can choose from a variety of Barchart preset screeners. So what are we looking for of these candidates, or how are we defining these potential candidates? So first of all, we're going to look for those stocks that are above the 200-day moving average. Now, I was taught there was nothing good happens below the 200-day moving average as an investor. And this, for me, has always been a hard stop, and that price needs to be above. We'll look at sorting away from those that don't have a price above $2. This is going to get rid of a lot of our penny and over-the-counter stocks. A minimum volume bar, right? I just want to see markets that have liquidity, or really kind of avoiding those that have illiquidity. And then we have two filters that are based on volatility. What we're trying to accomplish here is we want to see shrinking price momentum. In other words, coiling, right? And which is also completed by a set of short time frame highs and lows that are inside of higher time frame highs and lows. And so the result that we will get from that will be these candidates. Now, before I move on, there are two benefits of being a Premier membership. And again, there could be a little bit different in terms of different memberships. Gene, maybe we'll have time, we'll talk about this. But one of the things that we can do is we can send an end of the day email to ourselves based on the results of the screener. So Premier members, this would be a feature. Not only do I can get an end of the day, but I can also get multiple intraday reports. The other benefit is I can create a watch list based on the results. And later in our session today, I will show you how I've created two watch lists based on these two screeners, and then I've either added to that watch list based on other candidates that come up over a certain amount of days. Now, from here, what we want to do is we want to think about looking to identify candidates that are approaching recent highs. And we can do that using a visualization, and we'll look at that in a moment. We're going to look at two strategies. One is just an outright long buy, just if we believe in a long-term investor where this might be a good buying opportunity. But we can also trade options against a lot of these. And one of the option strategies I think that would work really well with a lateral price range would be a bull call spread. Now, in terms of risk management, one of the things that we can do is we might use the range as a tool for risk management. In other words, we might use the bottom of our range that we're breaking out of as a risk management assessment. So as I said, we can do a visualization assessment in terms of those candidates. And one of the easiest ways we can do that is using our flip charts. That's what I'm doing right now. Now, what we said was, remember, we want to kind of look for those that are near or at the top of their range. So here's an example that we would say, hey, maybe this is not an ideal candidate. It's kind of in the middle of its range. Sometimes you might find a candidate that looks similar to this, and these are candidates we probably want to throw away. These are our outliers. Now, what could cause this kind of big jump in price? Well, a lot of times it's something that's just as simple as earnings. And you can see that earnings created this jump. And since that earnings, now a jump in earnings is not a bad thing. We could definitely find a good candidate that might be continued from an earnings. NVIDIA is a great example of that. But this stock traded sideways until its next earnings, and it's still trading sideways up. So this would not be an ideal candidate for one of assessments. Here is really kind of what we're looking for. This is Herbalife, and these are the types of candidates you're going to encounter with this screener. So we'll find a lot of these candidates where we're at the end of a downtrend and now are poised to break our most recent highs. Now, trend lines here, I've drawn a trend line. Trend lines are subjective, and there's no guarantee that price is going to break out. I also have drawn a horizontal line, basically a line of best fit, and you can kind of see how this line has lined up with a lot of recent highs, and when price broke below it, it kind of accelerated to the downside. So it's kind of like a pivot line as well. So how can we determine if this is a good candidate based on, let's say, a breaking of a trend line, breaking of our recent highs, and then in this case, this pivot? So one of the things that we can do is, and I do this as a trader, is I'm going to add a filter. I'm going to make this stock perform a certain price movement before I can confirm this breakout. And that tool that I'm going to use is called average true range. So if I go up here to the more data button, and I click on the technicals, you can see we have something called the 20-day average true range. Now, if you're not familiar with the average true range is a measurement of volatility that can be used as a measuring stick that tells you on any given day the average range, not directional movement, but the average range between high and low of this stock is around 64 cents. So we can use this value as a filter. And what I tend to do is I'll use a multiple of this, 1.5 to 2 times the ATR. I want to see price get above that level in order to confirm a breakout. Now, some more conservative traders might use 2 or 3 or maybe even 4 times ATRs to filter out a breakout. So if I use 64 cents, well, 2 times would be $1.30, and 1.5 times would be around $1. So based on the breakout of this horizontal line, that would put us, between 15.34, let's say $1, 16.34 would be a level where I would say I would be confident that we have now broken out of this range. Now notice that in this particular case, if we use the 16.34 level, it does put price above what I would consider maybe the last bastion of potential resistance, right, of our stock. So from there now, what we might do is we can start to think about risk and reward, and based on the type of trader that I am. If I'm in an investment trader, right, what I might do is come over here in this toolbox over here, and we have a risk reward uh, calculator for you. So what I can do is I just click on the value where I'm thinking about that breakout value. So let's say 1636, and I could click once, and that it will put in the entry price. Now, if I'm a long-term investor, right, and I said we could use the bottom of our range as our risk. Here we see around $12.30. So I'm risking $4. Well, that would be okay if I believe that this stock had a lot of room to run. And now I think if we go back and look at this stock, we can see that it was not too long ago this stock was a $40 stock. So for a long-term investment, that might be our price objective goal. But for a short-term investor or somebody who is a swing trader, or then a $4 risk where I have to respect or look at potential areas of resistance. We talk about breaking that trend line, but we really haven't confirmed an uptrend until we take out a recent swing high, and that would put us around $19, or the top of this would be around 1950. And if I use that as a target, I'm risking $4 to make only about $3. That is not a good risk reward ratio. So I need to find a level where I can believe I am right, and if price gets below that level, I am wrong, and it should tell me to exit that trade. So looking at this chart just here, again, think about what we are screening for. We have reached a level of resistance. We've stopped for a moment, and now we're gathering energy and we're breaking out. So I could say that this level around below this last candle, this last red candle, would be a good level to set my risk. And then I would set my target, around the range of those two recent highs, because if I believe in this as an uptrend, then those two highs should be taken out. Now, if I do that risk assessment, you notice that my risk reward is only 1 to 1.67, or 1 to 7. That is a low risk reward. Now, there are some traders that are willing to take trades based on that value. Again, it's a preference of the trader. For me, I really like to hold my trades to a higher bar. Typically, I want to see at least above 2 to 1, probably closer to 2.5 to 3 to 1. So it doesn't mean I could give up on this trade because it doesn't work. It just means I have to reassess the trade in terms of risk and maybe my entry. So in typical bull fashion or breakout fashion, many times price will break out and we get it up to that 1630, giving us confirmation when we've broken out, but then price will retreat. And many times it will retreat and find support at our previous level of resistance. And so again, we said that if we clear all of this resistance here, that would be around $16. So I could change my entry on a pull looking for that drawback around $16. Now, as far as my risk for my stop, then again, we can use some technical information. Again, I could use this 1534 as a potential price where if price comes back below that, that might be stop me out. Or, where was the origin of this breakout move? Let's say the bottom of this green candle, which would be below our trend line. And if price broke back below that trend line, that would probably be a bad sign in that assessment. And So if I do that, let's do this. I changed my parameters one too many times. 16, and then we're going to use this 1485 level, and then our target would be that 1950 area. And now you see we've got a 3-to-1 trade. So again, you know, a lot of times you're going to get a good candidate. You just have to make sure that that candidate fits your parameters in terms of risk reward, and you might have to modify your trade based on those potential entries or exits. All right, so this actually is off. Let's change this. This is supposed to be entry. Okay, stop. Yep, no, that's right. Okay, we're good on that. Okay. So the other thing I said that we can do in terms of the screener is I could screen on multiple I'm getting on these multiple candidates. In this case, I have 35 candidates to look at. And what I can do is I can create a watch list. And that's exactly what I did is I created a watch list last week as I was preparing for this webinar based on the candidates that were coming out of the screener. Now, what I did is as each day I was receiving those emails, I would go through those and see what candidates I liked, and then I would add them to my watch list. And that's is what I have here. This is basically the best of the screener over, let's say, the last week or so. Again, we said we could start doing a visualization as part of our process. And so let me just turn on flip charts here. And again, you know, there's that one of those kind of typical candidates. So this is not a great candidate for what we're trying to achieve. So this is in my watch list now. What I can do is I can go in here and just click on the star that says watch list and see how it's in my range. This is my lateral range watch list. And I'm going to take it out. I'm just going to off click it. Now, the next time I look at this watch list, generated it again, it will disappear from my watch list. So I said that we could do a visualization to help us find those candidates that are breakout, but maybe you don't have that skill set, or maybe you don't have that confidence to look at a chart and say, hey, you know, this definitely looks like a stock that is moving in the right direction. So what we can do is we can screen upon the information or the candidates that we collected from our bar chart screener that we threw into this watch list. And that's what I'm going to do here. And so I'm screening on this range watch list. And so one of the filters that we can look at to help us determine a positive price momentum inside of our screeners, we'll have something called bar chart opinion. And if I go to that and I'm going to select on the short, medium, and long term, and I want to look at just the short term. Remember, we've already sorted these by long term, right? That long term consolidation. What I want to see now is that short term positive momentum. And I'm going to add that, and I just want to look at a buy signal. Now, if you're not familiar what bar chart opinion is about, there's several webinars that I've done on it, but on any stock page or ETF page, you will find up here it says bar chart technical opinion, and it'll give you kind of a snapshot of what the opinion is. But if you go to the see more and you look under the short-term indicators, you can see that the short-term indicators revolve around the 20-day moving average. In other words, if price is above the 20-day moving average, that would give us a buy signal. If the 20-day moving average is above the 50, that would give us a buy signal. If the 20 was above the 100, it'd give us a buy signal, and 20 above the 200. Now, what we can see on the case of Herbalife here is we've got a split, right? We have 2 buys and 2 sells. So maybe this candidate is not ready yet, right? Maybe we need that confirmation, right? We need that price above. But if I look at, let's say, our long term, our 100-day and 200-day price is above. So we're probably very, very close to turning one of these into a positive in terms of a bull. So this is a way you can look at price momentum and screening those potential candidates. Now remember, we're focusing around the 20-day moving average. So again, if I go back and I want to sort by that idea, I can just come into where it says new highs and new lows, and I'm going to pick a new high date, and I want to see a new high date within 20 days, 20 trading days, 1 month, and I want to see it have been made, let's say, as we're breaking out, right? Either on today's session, but let's look at, let's say, over the last like 4 trading sessions. And that would take us back until Friday. And again, I'm looking at that result and see now what we've done is we've lowered the potential candidates from our watch list based on the characteristics that we follow on the screener. But now I'm adding, just a little bit of fine tuning to help me narrow down some of these candidates. Now, when I was doing this morning and I was going through this, remember, these are candidates that had appeared previous days that I threw in. So let's go to our flip charts. And, here is Elegant Technologies. And here was the purple line I drew, which basically was that resistance on the day that it was part of the selection process through the screener. And this is really what we're going to see. This is what we want to see as we're finding those candidates. So this is that result, right? This is what the filter is going to identify this potential candidate, and this is the result we will end up seeing if this market works in our favor. Here's a Holly. Again, in this process, again, we talk about, this bottoming action, right? Now, sometimes what you will see is a very typical kind of price action, which is called a cup and handle. Let me go to this chart here. Again, here's our basing range, right? Our trading range. And, yesterday this hit the signal because it was breaking out of this range. But again, if I look at this over a larger time period, a lot of these candidates you're going to see are going to have this kind of cup and handle. And this is a very bullish technical chart pattern. And so again, if I look at Holly, I didn't mark it up, but you can kind of see that cup and handle. Now, Holly is not ready, right? It's not near that breakout level. Here is IONO, and this is kind of where we want to be when we think about the candidates that we've discovered. If we're going to we don't like the risk reward. We didn't like the way the breakout confirmation entry price works in our risk reward based on either the range or based on the near term target. So in typical price fashion, when price breaks out of a range, typically you get that thrust movement. Again, I would look at my ATR, and in this case, this one did fulfill that ATR assessment. And then you get a bit of a pullback or drawback and to where old resistance becomes new support. And this would be a great entry level to help you lower your risk, lower your entry, to help get that better risk reward trade. And so the other one that I thought was kind of interesting that was in my screener here was this super microchip computer company. And again, you can see in this time frame, we are in this range and we have just recently broken out. Now, based on this high and this high here, I did the ATR assessment on this one. This is a large, this stock has a large ATR. it's about 15, 16. Yeah, so we're talking about somewhere between, around $25 to, $32 range. But from this breakout from um, uh, 305, we did get very close to that 1.5 ATR. So this would be a candidate where maybe we would wait for, again, that potential pullback or drawback in terms of taking this trade. But, let's think about this trade. We looked at Herbalife, which was just a $15 stock. Well, now we're talking about a $300 stock. So $300 is a very expensive stock for the average person. So maybe what we could do on this one is there a way we can trade these very expensive stocks without actually the large amount of capital outlay? And that would be options, would be a great way to trade. So what I can do now is I'm going to come back into my watch list here that I've now screened down, and I'm going to add a couple other filters. And that first filter I'm going to do is down here is I'm going to say options overview. And I just want to see of these candidates, which has options. Now, just because a stock has options doesn't mean that it's still going to be a good candidate. We want to make sure that stock has options and it is actively trading options. If it's not actively trading, it'll be very difficult for us to actually get some trades off. So let's go to total options volume, and I want to see total volume, and I'm going to add that to my screener. Again, now I'm going to go to my results. Here I am under my filtered results, the filters I just added. And these are all the stocks that have options. And you can see Super Micro Chip Computer is options trades 28,000. So this would be a much better options candidate. So one of the processes we said about options trading for these type of trades, these lateral price movement trades, would be a bull call spread. Now, let's go from here. We can go to this links button over here, and I can go to where it says options quotes. And anytime I buy an option, I want to make sure that I have a lot of time, or at least enough time for the stock to move. I'm willing to pay for time in order to get a better result. So let's go out a couple months here, and I'm looking at the February, which gives me about 60 days or 58 days, 2 months until expiration. And we want to look at our credit spreads because I'm buying. I'm looking at the bull call. And we looked at our chart. We said we wanted to see a price action above, looked like that confirmation above, let's say 320. And let me go back to the chart here for a second. Where would be our target? Well, again, there's a lot of clear air here, empty gap space. And, our most recent highs off of this, after this range, would put us around that 350, 360 level. So let's go back to our credit spreads. And again, we're going back to the February. So, I'm thinking 320, 350 or 320, 360. And here is the 320, 350 right there. And it looks like it's going to cost us $11.20 for one option. And we have a potential of making $18 or a potential of 160%. Now that is certainly a lot cheaper than buying, a $300 stock. Now remember though, one option, it allows you to take control of 100 shares of this stock. So that would be $1,120 of capital outlay, still a lot cheaper than if I was going to buy 100 shares of Super Microchip Computer. So that would be a nice way to use our screener to find a trading opportunity for that candidate. Okay, so let's move on. And let's go back to our stock screener. And let's go to our upward base consolidation. And let's look at those parameters. So what's the first one? Well, 50-day moving average. We want price above it. And this is kind of our industry standard for trend, right? The market likes to see stocks above the 50-day moving average. Volume, again, a minor threshold, just to make sure that we find liquid stocks. A number of new highs. And this is another positive sign for trends. How many new highs are we making in the month? And then 3 filters that indicate or identify volatility. Now, what we're looking for here is a little bit of a contracting volatility. In other words, our market is gathering energy. Now, why would that happen? Well, usually there's structure. Again, similar to what we just saw on the range screener. And then look at increasing volumes, right? That's short-term momentum. Now, volume is a great indicator or excellent indicator to help us confirming that price is doing something, right? Larger volumes is a confirmation, or it kind of verifies that price action. So looking for increasing volume above 5-day, above the 50-day average. And then again, that 20-day moving average was a momentum indicator. And again, we want to see price above that. We want to see our 20-day above our 50-day moving average and our 5 above our 20. Again, short-term moving averages and that confirmation of positive momentum. Then we'll look at those candidates that are near that monthly high, again, poised. Many traders like to see stocks make new 4-week highs. That's kind of a standard. So that's what we're looking at. And then, how far we want to make sure that our low price is below the previous day's high. So that's going to give us a lot of candidates. And now, again, this is going to depend on this screener. You're going to get a lot more candidates than you would see, let's say, in the other screener. So for today, it looks like 179. Earlier this morning, it was closer to 250. So I'm going to show you ways that we can kind of sort from all these. But to be honest with you, this is kind of the hard work of investing. This is the hard work of trading, right? You gotta, dig through the hay stack to find, those really nice needles. So you got to do a little work, but I will show you some ways how we can narrow down a lot of these candidates. Now, remember what we looked at in our slide for our lateral price. For our upward baseward consolidation, again, we're going to look for current candidates that have a robust uptrend or are breaking away from a bottoming action. And we might wait for opportunities for drawbacks, similar to what we just did in the lateral price movement from those previous highs. 2 strategies that we could use is, again, just an outright long, or we're going to look at something called a naked put. Here's where we're going to sell an option as we wait for price to come back to us. And then we can use our swing lows and our previous resistance as levels for our risk management. So identifying the 2 types of candidates we want to look at, robust trends, right? And now in current market conditions, the way the market has been acting recently, a lot of these candidates you're going to see are going to be poised to be taking out their all-time highs. Or the second candidate is those that are breaking away from a bottoming action. Now, I want you to think of those as those that have graduated from our lateral price range screener, the next leg, right, after the confirmation of an uptrend. So let's screen on, excuse me, not screen, we're going to sort by some of our inputs. And the one input I'm going to sort here is by my monthly highs, number of monthly highs. And I'm going to go for the ones that at first have multiple monthly highs. And again, if you think about some of these stocks here, if I have a monthly high of had 15 monthly highs, that is literally, it's making a new high every other day, right? There's 20 trading days in a month. This is a stock that is really on the move. So again, most of these candidates will probably be those that have a very strong uptrend. So I did look at a few of these coming in this morning. And so here's some. And again, notice the candidate, right? Nice, strong uptrend. And just in recent days, it's just kind of paused. Why has it paused? Because it's coming up against, some structure, some recent highs. So again, could this be an opportunity to take this trade? Yeah, I think it would be, as long as we got that price confirmation. And again, notice in terms of big picture, poising to take out this high and getting an opportunity to maybe attack our all-time high. So let's see what some of the other ones here's TRP. Again, this would be that breakout, right? That candidate after our lateral price breakout, that candidate that is confirming an uptrend after breaking a downtrend line. Here's IR, Ingersoll Rand. Again, another candidate that is in a nice strong uptrend, and again, right, is now in all-time high territory. And let's see if I can find one more example for you that based on what I was looking at. All right, let's do this. Let's go back and sort. Now let's sort on the other end. Let's look at those that have only made a few highs. Remember, our criteria was 5 new highs. These are ones aren't. So these ones might be more of those cup and handle types, more of those ones that are breaking out of a most recent low bottoming process. And let's see if I can just find a good example of that based on some of my examples. Again, you set up these trades in the morning, Gene, and the market changes for you. But again, you can kind of see what we're talking about. Here we're kind of basing just before ready to break out of a potential range. All right. Let's do this because I know where I can find some good examples. So I made a watch list based on the base consolidation, and these are candidates that I started to, cipher through based on the screener. Here's energy transfer. Again, it's kind of basing in a range, is gathering energy and a nice uptrend, a very long, sustained uptrend. So there could be some potential in this one. Again, probably want to wait for that price confirmation. Here's, I believe this is Abbott Labs. Yeah, so again, this one hit my screener a few days ago, and kind of again, that where do we see this is that result? That's what we want to see, right? That basing action, breaking out of a potential range, and wait for that confirmation of a trade. Here's a legit technology was not only in our lateral, but here it was also in our base consolidation. Here's DT. So this is really why we need that confirmation, why we want to make sure we hold these trades to a higher standard, even though we just found them through our screener. So here, we kind of broke out of this range, but we didn't get outside of that multiple ATR. In this case, I think this one, right, this is $1.20. So that's around 240 to about 180. and it just popped its head out. So this, again, this is kind of a failed breakout. Doesn't mean that this stock is not going to go up, or maybe it might fall back to this range. But again, why we need to use confirmation in terms of price before we just jump into a trade. Now, the other one that I saw, here's snow. And again, here's that, we're in this range, this base range, right? And we're getting very close to breaking out. So where do we want to set that up? So let's go back our technical analysis. Here we can see our 20-day moving average, ATR is around $5.60. So 2 times that would be, $11.20. 1.5 times, would that be about what, $8.50 or so? So, let's just kind of round it up and say, let's say we want to see this stock get above $10 above its breakout range. So, we can see that that looks like it's right around 200. So what I might do is I say, I like this trade, but I'm not ready to put this trade on. I want that confirmation. So I'm going to set an alert, right? And I want to set an alert based on price. And I want to see a high price. And I want to see a high price that is greater than $210. That would give you that confirmation. And now I have set an alert. And then if price gets above there, I'd get an alert on my account. I know the benefit of why you should be a subscribed member and take that trade. Now, this is kind of where I'm at for today. And this is a really interesting stock. This is a AIG. And I don't know if you are familiar with AIG. I'm sure most folks are. And let's go here first. So again, here we can see that nice uptrending market. We have just broken out of a level of resistance, right? Most recent highs. I need to probably get a greater confirmation on this one, this black line. Now, what makes this black line very significant for me, and this is what I think is intriguing about AIG, is, let me kind of squeeze this up. And this was one of the stocks that suffered tremendously during the great financial crisis, where it lost over 95% of its value. But you can see that this black line here is a resistance, a level of resistance that goes all the way back to 2009. And if we could get a confirmation above this, right? Again, we'd have to look at that ATR assessment, and I think it was $2. So above, let's say $68, this could be one of the, for a long-term investor, this might be a really good stock to look at because of all this wide open space where price. Now, back during the great financial crisis, AIG wasn't a $1,500 stock. It had a reverse split, so the chart is really showing you that reverse split value. But you can see that there's a lot of potential in this one. Again, I would still need to do my risk assessments on that one. So again, this would be one I probably would set an alert once it got above $68. As a long-term investor, I might be able to take on a little bit more risk because I'm looking for a much greater profit potential. All right. Ooh, I was getting through a lot of this stuff here today. Hope you guys are enjoying this, by the way. All right, so let's go back to our watch list, and let's go to our base. So another thing we can do, besides just being an outright buyer, is like we did with the other watch list, is we can screen on our watch list, and we're going to screen on options. Again, I want to make sure that my subjects or my candidates have options. I want to make sure they have some volume. And then now, because I'm going to do a strategy called a naked put. Now, if you're not familiar with a naked put, a put gives you the right to sell a stock. So if you sell a put, you're giving somebody else the right to sell to you. In other words, you will be obligated to buy if that put gets exercised. But if you do this right, you could sell a put at a level where you feel comfortable buying a stock. Plus, you're going to collect a premium, which will discount the stock, which is a kind of nice little feature. So what we want to do in terms of selling options is we want to make sure that our implied volatility is high. Now, why is that? Well, that's because it's going to tell us that stock option prices are expensive. High volatility, expensive options. So let's look at the 1 month implied volatility. And again, let's look at our candidates. And let's sort by implied volatility. 1 month implied volatility. Actually, what did I do wrong here? Hang on. Let me change my screener here. Let's check something here. And the markets are always changing. This is crazy. All right, let's do this. Maybe we'll change this one here. Well, this morning I was looking at the Lamb Weston was coming in with a high implied volatility. Now maybe it's because it's backed off a little bit today. That might be the reason. It was showing a much higher implied volatility. So we wanted to look for those candidates that have a high implied volatility. So since I've already done this process, let's go through that with Lamb. And again, what am I trying to accomplish here? So here's a stock that's already moved, right? I don't really want to chase this trend. It's broken out of that level of resistance. We've got the ATR confirmation, and now price is moving back. Now, where would I want to buy this? Well, where do I feel comfortable buying this? Well, maybe somewhere below 102.50 to about 100. Now, there's no guarantee price is going to go back there, but I've already identified this candidate, and I want to have an opportunity to make some money on this candidate based on, my selection process. So what I could do was I could sell, and this is exactly a trade that I did today. Again, this is not a recommendation. I just need to be full disclosure. As this is a trade I did do today, where I sold the 100 put. Now, normally when I sell puts, I want to sell a put that doesn't have a lot of time in it, and I sold the January expiration, which means it's within a 1 month, hoping that that put will expire worthless. I sold the January 100 put for $2. So think about this now. If price comes down in an area where I'm willing to buy it, right at $100, I've already collected $2 worth of premium. So my break even would be $98. And if I look at this chart, where is my most recent swing low? Well, you can see that that swing low is right here. And that's just a little bit below or above $97. So as a long-term investor, if I got exercised on that option, I would be buying the stock at $98. I'm only going to risk $1 on this trade for a trade to me that feels like, we could eventually test these near-term highs. That would be a really nice risk-reward ratio. If price moves away from me and I didn't want to chase this, right? I certainly don't want to chase price. I still would collect those $2 if that option expired worthless. So selling naked puts at a value where you feel comfortable owning it on a shorter time basis, it's a great way to make money or get income from one of these candidates that we found in the screener. Now, if I make $200 on this trade, come January 20th, well, by chance, that is more than my yearly premier subscription. So I think the screener itself pays for the subscription. All right, Gene, it's about 5 minutes here before we reach the top of the hour. So let me do this before we go to some takeaways. I want to look at some of these questions that have popped up. So let me take a moment to do that.
While John is looking at the questions that you've sent through, I just want to take a moment to let you know that a lot of the things that he's showing you today, specifically the 2 Barchart screeners, they're available if you have just a free membership, but you're only going to get the first 20 results. You're not really going to be able to get the full benefit of what he was talking about today. You really do need a Barchart Plus or a Barchart Premier membership in order to get the full results of the screeners, to be able to save the screener results to new watch lists, to analyze the watch lists, set up end of day emails based on your watch list and different criteria. So if you haven't already taken a try at Barchart Plus or Barchart Premier, and if you want to try some of the things that John was teaching today, then by all means, take us up on a free 30-day trial and get yourself started with looking at these 2 pretty cool screeners he's showing you.
Great advice, Gene. Very good. Very great advice. All right, so I've gone through a lot of these questions. I see Gene has answered a lot of the questions more about technical aspects of the website. So great job on that, Gene. So yeah, most of these questions I feel like I've answered at some extent. Here's one that is a good question. It says, do you wait for a closed candle before taking the trade, a trade long? And that's from Joseph. So yeah, candlestick theory basically says that you need to wait for the candle to close to identify what that candle is telling you or whatever. But yes, in terms of, let's say, our confirmation or ATR breakout confirmation, yes, I want to see a closing price that is 1.5, 2 times ATRs above our breakout level, not just the price going above there and then retreating, right? That was an example on DT. So yes, I would think that in terms of your risk assessment profile, that is part of my risk assessment profile. I need to see a closing price above that variable price. Okay. I just saw one that popped up here for Mike's asking about covered calls. Yeah, I think, Mike, that would be an advanced strategy, right? You buy the stock as it breaks out, and then maybe you wait a day or two as you get that price momentum follow through, and then you use that opportunity to sell a covered call, or you could do it instantly based on, let's say, that objective price that we want to look at maybe in the intermediate time frame. So yeah, I think a lot of these would make great covered call candidates. My personal experience would be, if I'm going to put money at risk, I want to try to get as much return as possible. And if I did a cover call at that moment, maybe I might not get the full benefit of that price movement. Maybe I might wait a day or two before I sell a cover call. But you certainly could do it as the time as you enter the trade. So I think that's a great question by, I think it was Mike. And there's been a couple questions here about the video itself. And yes, all of our videos are recorded, and you'll be having an opportunity to look at them on our website. If you don't know where that is, under the Learn, under the Art, archived videos, webinars, and there's today's. Not only is there's today's, but if you click on it, you will see up here, you can see where we can download the slides for today, which brings us back to our slides. So one more little point here, a takeaway point is you can use volume. I mentioned volume a couple times in our sorters and as our filters, but volume is a great indicator. It's just price is just the result, right? If there's no transaction, there's no volume, there's no price. Rising volume confirms or validates price. Falling volume puts price in doubt. So a lot of these breakouts here, you want to see some confirming volume on some of these breakout candidates. And spikes in prices can be a warning that price is going to move dramatically. In other words, greater risk. It could move in your favor, could move an opposite of your favor, but it probably something dramatic is going to happen in terms of volatility. All right, so a takeaway here is that Barchart preset screeners identify candidates based on specific parameters. Investors and traders' jobs is to sort and select the candidates based on their individual strategies, risk objectives, and goals. Barchart screeners are a tool and not a recommendation. So that's my final thought for you. And my final thought for this year, Gene. So, and this is what Gene says. We can do a 30-day free trial process to try out some of these screeners and do that advanced screening session. So, Jeannie, would you like to add anything before we end this year?
Just everybody have a wonderful end of your 2023, and we hope to see you back for some more educational sessions with John in the coming year. That's it.
Yeah, we have a lot of cool stuff we got planned for next year, so I'm looking forward to that. Gene, thank you for a great year. I appreciate all the work that you do. Folks, everyone have a happy and healthy holidays. Be safe out there. The best of health and the good of all trading.